Have you been dreaming about that cosy loft conversion or that spacious kitchen diner? But does the price tag give you a pause? Well, don't let the fear of missing out on your dream home get to you. I'll run through the pros and the cons of home improvement loans. So let's start with some figures. On average, completely renovating a 3-bedroom house in the UK can set you back anywhere from between 40 grand and 80 grand. But the cost can vary depending on the extent of your project. A house extension is likely to cost more than fitting a new bathroom, for example. Now, unless you've got a big stack of cash sitting around, you might need some financial assistance to bring your home improvement dreams to life. This is where home improvement loans come into play. There are various ways to finance home improvements, from a home equity loan or a mortgage further advance, remortgaging, a home equity line of credit, which is called a HELOC, to a home improvement loan. There are loads of choices. So what exactly is a home improvement loan? Well, it's a loan specifically designed to help homeowners like you fund renovations or improvements to your property. These can range from cosmetic changes to larger, more expensive projects like a loft conversion. Most of these loans are secured, meaning that your property will be used as collateral in the loan agreement. But don't fret, as this can actually be a good thing. The loan being secured usually means that you can borrow a more significant amount of credit, which is ideal for home renovation projects. Now, you might be wondering, what's the difference between a secured and an unsecured home improvement loan? Well, an unsecured home improvement loan is a type of personal loan for home improvement purposes, where you don't need to list an asset as collateral within the credit agreement. This means your borrowing power is likely to be much less than secured home improvement loans. Now, let's talk numbers. How much can you borrow for home improvements? Well, if you're using a secured home improvement loan, your borrowing power will be partly determined by the amount of equity that you have in your home. The more equity you have, the more likely you are to be able to borrow. You can use a home improvement loan calculator to get a rough idea of how much you could borrow and what your repayments might look like. This is how home improvement calculators work. A home improvement loan calculator uses a representative example interest rate to calculate what your monthly payments would be to repay your loan and its interest. As a potential applicant, you'll need to enter the loan amount that you need and your preferred repayment period, typically in months or years. Nowadays, most calculators come with sliders, which help you understand how changes to the loan amount or the loan term affects repayments. For secured home loans, a calculator might factor in the value of the asset used as security, like your home. But here's a crucial point to remember. A home improvement loan calculator is never 100% accurate. Why? Because it uses a representative interest rate, which may not match the rate that you're actually offered. Your personal circumstances and finances, including your income and credit score, influence your interest rate, and these factors aren't included in the calculator. So, treat these calculators as a guide for generic comparisons only. To get a more accurate quote, some lenders may offer to use your personal financial information for a human assessment. These quotes are generally free and more accurate, but they aren't widely available at this time. And even these quotes aren't 100% because they don't include a look at your credit score. So always take these numbers with a pinch of salt and do your own thorough research. Now, the million-dollar question, are home improvement loans the right choice for you? Well, let's weigh up the pros and cons. Here are the pros. You may be able to borrow more money than generic personal loans if you go for the secured type. You may be able to borrow with a lower interest rate if you opt for the secured type. You can apply online easily whether you choose secured or unsecured. They can help you increase the value of your home and thus increase the home equity. Now, here are the cons. The cons are you could lose your home predominantly if you opt for the secured type. Availability is subject to status and your credit rating, whether you opt for secured or unsecured. Missing repayments will damage your credit score, whether you opt for secured or unsecured. So while using savings is the best way to pay for home improvements because you won't need to pay interest to finance your project, leveraging your equity to make home improvements is still a good option for most homeowners. But what if you have poor credit history? Can you still get a home improvement loan? The answer is yes. You might even have a better choice if you use a secured home improvement loan. There are even special products called bad credit home improvement loans that cater to homeowners with poor credit history. They might have higher interest rates, but they can help turn your dream project into a reality. Home improvement loans, home equity loans and HELOCs are all worth considering when needing to finance a home improvement project. But there's no single best option, as the best one will depend on your personal circumstances and also the housing market conditions. An interesting option is the home equity line of credit or HELOC. Unlike other loans, a HELOC provides you with a drawdown facility rather than a lump sum loan. By using a drawdown, you benefit from staging the loan in line with the different stages of your home renovation project. This can make the project budgeting a bit easier, and you only pay interest on the money drawn rather than the whole loan at once. On a separate note, if you're buying a property that needs considerable renovations, also known as a fixer-upper house, then you may want to consider a home renovation mortgage instead of the above. Home improvement loans can be a really helpful tool just to turn your house into that dream home. But remember, it's essential to weigh up the pros and cons and consider your financial circumstances before making a decision. Always do your research, compare rates and consider all of your options. After all, we want your dream home to be a source of joy and not stress. If you're considering a home improvement loan, then click the link below and fill out the short form. It'll contain a few questions like whether you're a homeowner and how much you'd like to borrow. It'll give you access to quotes from around the UK tailored to your circumstances. It's totally free and, of course, it won't affect your credit score. So just click that link below, fill out the short form and give it a whirl.